Hi everybody, welcome to the Leeb.com video for August 3rd, 2010. Stocks were unable to keep the momentum from last Friday going as some weak earnings results and a slew of bad economic numbers reminded everybody of the still soft U.S. economy. Heavyweights Procter & Gamble and Dow Chemical reported disappointing earnings results for the quarter, and changes in consumer spending and personal income both came in below expectations. Factory orders were down, as were pending home sales. So it's looking more and more likely like quantitative easing round 2 may not be that far away. Also, U.S. banks are coming into the spotlight once again, and not in a good way, after the IMF reported its finding on the U.S. financial system. The IMF concluded that while the U.S. banking system is stable for now, it's not out of the woods. Banks will need to raise billions of dollars in the event of deterioration in the real estate market and the general economy. Banks could need, according to the IMF, up to an additional $76 billion to meet their capital reserve requirements in an adverse scenario. The IMF cites the need for U.S. regulators to vigilantly monitor economic conditions in order to cut potential shocks to the banking system off at the pass. Regional and smaller banks are especially vulnerable due to their larger exposure to commercial mortgages. Of the $1.4 trillion in commercial loans about to mature between this year and 2014, the IMF estimates that nearly half of them are already quote-unquote seriously delinquent. This means the loans that are 90 or more days overdue, or properties that have negative equity. Barring a sudden turnaround in the U.S. economy, the commercial real estate market will continue to struggle. Basically, the IMF's findings reaffirm our concerns about the U.S. financial markets. We reiterate the importance of investing in gold and gaining exposure to emerging markets. That's it for today. Thank you for watching, and enjoy.